Good afternoon, everyone. Good morning. A lot of you also. Depends on the time zone. I hope you can hear me okay. Essentials Room. I hope you can hear me okay. And I wanted to go over a number of things with you, but first, want to be sure the mic's working. There, testing the mic. Wanted to be sure you could hear me okay. So definitely let me know. Great. Great. Thanks, Bob M. So, just to let you know what I'm watching, because I think it's really important. One of the biggest mistakes I see over 43 years. Now, keep in mind, in this type of market, you get away with mistakes. So, what I mean by that is you go into something like Google and you go and buy it on the way down, you get bailed out. I mean, that's not the way I trade in the long run. Microsoft, you get bailed out, sort of. But the problem is a lot of people miss is sure it looks like you're up now. But if you bought here, you're almost blown out. You know, it depends what kind of firm you're a day trading firm, they might make you get out. So I thought I'd go over with you proper initiation. So I think proper initiation over a long period of time is the way to do it because on the way down or here, you don't know when it's going to turn. So the first thing when I watch initiation is I look for reversal patterns. So the first thing I also look at, like today, you have the bond market on the low. Heck no, am I buying anything on dips? If I buy anything like that, it's going to be tiny, and it'd be something like a rumor takeover, which we've been going over. But besides that, let me show you everything else. So we're going to go and take the mighty Microsoft. And I just can't stress enough how proper initiation is the way to do it, not by blindly buying dips and then getting bailed out in the long run. So a lot of times I've seen that kind of thing go on for, you know, a month. So let's just go over it so you know what I'm talking about. So we're going to take number one, the overall market. So the overall market had no divergences the last couple of days after the CPI. Now, this was something that I put on StockTwits. I have over 50,000 followers. Pretty cool. And the reason I do, a lot of people, you know, the charts have been right. So if you go back to StockTwits, go look at this short at Cisco post market. But see this? That's where the bonds were with the CPI rally, right in there, right here. CPI rally, bonds were here. Well, that's all fine and good, except you realize the Russell was here. On the other hand, the NASDAQ's up in the stratosphere. Yep, it's given back nothing of the CPI rally. So if you had the bonds up like they were, and just keep in mind in there, and good job, Mitch. I was just going to mention that, is when something's in an uptrend, and if there's no negative divergences, yeah, you can buy dips. So YINN has been a good example. YINN, big old uptrend, you buy dips. If you don't buy the ultra China bull 3 times, then you could probably get away with buying dips in the Alibabas. Bad earnings, it doesn't matter if their markets are going up. The problem is, you just can't buy on the way down. I hate buying on the way down. I just make that clear. So first things first, with the bonds down 17 and the Russell at those levels when the CPI came out, then I am not buying dips. Maybe I'll buy a dip, like I said, in a biotech. This sure looks like what we call a Brecher ledge, where if that doesn't hold, it goes back down to here. It goes down by this amount. Right here. Now, I know it's slow out there. No doubt. But that's what I'm watching. 32 points. 32 points. If you make 32 points, if it goes to this arrow, email me. Right there. Right there. So let me copy and paste this chart for you. And it's nice to see you, Mitch. There. So all you're doing in here is you're combining the Russell's already down here. The bond's already down here. So the theory is with that kind of chart, it doesn't mean it has to go down. It could turn back up, but the probability of that breaking goes up because all the other incentives that made it go up are gone. So if you have the positive divergence, sure, you could look to just blindly buy dips, I guess. That's not the way I trade. But getting back to it, let me give you an example. So here is Microsoft on an hourly chart. So Microsoft has held support for now. I'm not saying I'm buying Microsoft whatsoever. I'm just giving you an example. With the bond market down 15, as you see on the upper right, or middle right, however your screen is, I'm not looking to buy a thing, especially with the NASDAQ teetering on the brink of disaster. So that's what I'm looking at. But I want to show you on a 1-minute chart what I'm talking about. It worked with AMD. It's working with Microsoft. So overall, bond market still rallying. If something opens down, where do you buy it? Well, like I said, I don't blindly buy on the way down. I'll buy when it hits support. I like these big arrows. I just figured these out. When it hits support and then forms the bull flag. So there are two ways to play this. One of them is Penn on our site on the Chart Patterns Mastery is really good at this. When you get near the support on a 1-minute chart, if you're playing every tick, you can look for a big red candle and a green candle that takes back half the red. Let me see if I can change this. Give me a second. Now, I was trying to make that not a cross. It sort of gets in your way. But getting back to it, all we're doing in here is you could definitely try to pick a bottom as long as you have a candle that took back a big red. The reason being, and I'll take this with a normal arrow, is then you have a backstop. I just can't stress enough that it sure looks easy to just blindly go and buy something on the way down. It helps if you buy it with a backstop. So if you don't play every tick, then you look for that bull flag. Then you know the direction is known. So I just can't stress that enough of how important that is. So just keep that in mind in there. Definitely the reversal and the bull flag. Reversal and bull flag. So just keep that in mind. So what's the next thing I'm watching? The next thing I'm watching is something like AMD that had good news. So what are we talking about in here? We're talking about that AMD had really good news. Overall, the bond market's selling off, so you got to be careful. But if you're going to play an AMD intraday, after a good move, You need to see some kind of trend line like that. Sure, you could buy it here. You could buy it here. You could buy it here. But if you buy 500 shares here, you're down $1,000. Sure, you come out ahead and you can pat yourself on the back, but that's not the way to do it in the long run. The way to do it in the long run is you wait for a turn. And a turn can mean a number of things. Number one, it can mean that. And so, Mitch, what do we call this? It's not as horizontal, but I thought you'd like this because I know you look at this. There, Stewie pattern. So an inverse head and shoulders, even on a 1-minute chart. The key is it has broken its extreme downtrend. Yeah, or a Stewie pattern for that matter. You know, if you highlight it, almost looks like Stewie from Family Guy, especially if you have a good imagination. But definitely looking at that. So, and then you're looking at that measuring objective. But the key is two things. When I day trade, I'm much more apt to use the ATR trailing stop. So maybe you only buy it up here. You could buy it with the trend line. You could buy it with the ATR trailing stop. But the key is that when you're buying it, you're going to lose less if you're wrong because it's not a tremendous downside momentum. That's the whole point. Now, keep in mind, through all of this, I'm still watching the bonds down. There's no reason these should be up. So, and they're not. They shouldn't be up. So, like I said, this could be a nice Brecher ledge right here, and that projects about another 30 points lower. So, chart patterns mastery, if you tuned in here, heck, number one, I'm not buying a darn thing other than maybe a panic thing like VKTX, because that seems to go up by the end of the day. But not sure yet. Not sure about any of that. But getting back to it about everything else, you gotta respect that could break. So gotta respect that. Right there. If that doesn't hold, you're talking about all the way with the CPI opening. So that's what I'm looking at in there. So keep that in mind. So I'm looking at short ideas today as long as the bond market is down where it was with the CPI. So keep that in mind. Hood was a rally until GME. Well, this is the way I look at it. The more speculation. This was on Trader TV, by the way. I brought this up last week. That if you started to get the speculation in GME, then you got to buy the place that the speculators are, which is Hood. So just keep that in mind. Another thing, the integration of Schwab and Thinkorswim. I bet there are a lot of people that are going to give up on it and they're going to go to Robinhood. So right now, exactly the opposite of what I was showing you with Microsoft when it turns. There is nothing in here that looks bad yet. If you see it look like that, yeah, maybe then I'll say it's the top. But you don't have that kind of structure yet. Don't have that structure. So now, this is where everybody gets mad. They're like, oh, I hated it up here, and now it's here. I'm telling you, you get a red reversal candle, and then you have a backstop. So I'm just telling you on how I've traded over 40 years, it's not selling a top or buying a bottom. So I've just seen that rodeo a million times and it works till it doesn't. So I'll give you, for instance, I don't know about you, but see that move? Yeah, you play it. Let's buy a dip. You only lost 500 points. How about this one? That only took a year to make your money back. So I don't play that game. I'll play reversal patterns. In fact, I got a good one for you. So, Mitch, we were just showing this. There are two big ways I like playing. I like that inverse head and shoulders. And I like after an inverse head and shoulders, a rectangle right there. Now you may say, well, here, you could have bought here when it hit the rectangle. Well, you don't know if it's going to here first. You wait for that green candle right there. I can just show you. That's October 30th. So we're going to go over here. And that's what I'm telling you. You got to, thanks for saying that, Mitch. You're partial though. So no, but thank you. So this is what I want to show you. So we're going to just take an arrow here so you sort of have an idea. Here is your support. Here is also historically you go up the end of the year. So when you get to that support, you don't blindly buy on the way down. Then you're looking for a reversal pattern. So if you don't want to do it on a daily, take a 4-hour. I don't know if my screens go back that long. Heck yeah, they do. There you go. So the worst part is a lot of people like, I can't buy here. I just missed it. But at least here, number one, you take that ATR trailing stop. Sure, you missed the first 100 points, but you quickly made the next 300 once it got over it. This, you don't know when it's going to stop. So, and it worked. Now, what do you do with the broad market now? Well, just like Johnny, you were asking about Robinhood, do I think this is extended? Yeah. Do I think it's overbought? Not that overbought. But what makes me think it's extended? Is it too far from the 200? No. Is it too far from the 50? No. And I'll show you. I think of 5 reasons why markets go down. 5 reasons. I'll just show you. One of them is if things get too far from their moving averages. That's what I mean by extended. So that's the 20. We'll put the 20 and the 50 up here. And all I'm doing over here is I'll show you measuring. See that? It's 159 points. Heck, it's been 159 points 8 million times. So it's like, well, it's not extended relative to the 50. How about to the 20? Yeah, we were showing that earlier. Yeah, it's a little extended relative to the 20. What's that mean to me? What that means to me is the markets can just sort of fester here for a while the indexes catch up. You're going to see a lot of other times when this has been like this. What do you notice? 3%, 4%, 3%. Yep, there you go. So usually what happens with that is it just sort of sits around for a little while. So that's one thing. If it got too extended, yeah, I think it would, that would be an extended. I don't call that extended. That's only one piece though. There are 5 different things that can happen. One is that. One of them is if the big tech stocks out of nowhere get destroyed. The other one is if something geopolitical comes out, even though that's usually temporary. And the other one is divergences with other indexes. And that's why I'm showing you the Russell. So the Russell on a daily. Or let's put 4-hour. So there you go. There's your first divergence. Russell is at this level. NASDAQ's up here. So number one, you have a divergence between the Russell and the NASDAQ. Number 2 is you have a divergence between the bonds and the NASDAQ. So now you have 2 things. Anybody that says markets are extended, I don't know extended relative to what. I think there are some divergences now, no doubt. But in the grand scheme of things, it's not extended yet. But there are negative divergences. Bonds versus NASDAQ. That's why I'd like to play the NASDAQ and the ES to the downside today, unless proven otherwise. That's what I'd like to do, and that's what we're going to be doing. So now comes the next part. The market's slow. So do we mess around with the markets now when it's slow? Well, there are ways to do it in a way where you're not going to lose a lot if you're wrong. So let's go and take this here and show you. Here's a great idea for you. Well, not great idea, but an idea. This is 1/10 of the SPX. We've been doing really, really well on these. We trade a lot of 0DTE almost every day. So what are we doing in here? Well, darn right, that could be that ledge in the ES. But it's scary. Definitely scary because it's thin. And you're oversold on an hourly. The easier way to do this is to do something under the market that's 1/10 the SPX if you have the urge to participate. That would be like this. That's like a 20-point wide. The problem for today. The problem is it's 92 cents. That's way too expensive. The most you can make is $2 and it's 91 cents. I'm not touching that. So let's roll it to this one. This is what we did yesterday. And before you say, oh, it's only 50 cents, you know, I bought 4 of them at 82 cents, sold them at $1.13 yesterday. So how about that one? Well, the problem with that one is you might rally first because it's so thin. But that's the kind of idea I like. So that way you're not laying out $5, $500. If it rallies on you, you lose 50 bucks. Now, the way we usually play this, though, is in a different way. Let's say like today, I shorted 200 shares of Apple, betting on the strike price play. So we shorted at 190.42 and 190.33. So a couple of hundred shares, you make like 80 bucks. We bought it back at 190.04. So you make like 80 bucks. Well, now you're playing with house's money. You can go buy one of those XSP if you want. Because even if you get wiped out on it, you're going to be ahead for the day. All about money management. So just that's how we try to play it. All about money management. So now that's the next thing I want to go over. So number one, it's thin. You know, you see it's thin. Number two, what is the market's keen off of today? And that was another thing that I thought you'd like. Yesterday, the market sold off on the close because they appeared to be keen off the big old bank stocks. So today, what's going on with the big old bank stocks are going straight up. So to me, I'm not sure about wanting to go crazy in the ES, which I haven't done. Because the things that made it go down yesterday are going up. Sort of going up. They're not really doing much, but they're going up. So not doing much. That's number one. Number two, the thing that underperformed yesterday, the Russell, is trying to hold up. So I don't see a reason to do a darn thing at the moment, and I'm not going to. So, and here's another one for you. So that's one thing, showing you when to initiate a trade. So like I said today, you got the bonds down, you got the ES and the NASDAQ way high relative to the Russell and the bonds. On the other hand, the stocks that would make it go down are going up. So you got to be careful, which means we'll probably play at the last minute. That's probably how we'll play it. Second thing, and this can be worth a lot of money, I think. It happened too fast, but this one worked great. What are we talking about? We're talking about the NASDAQ was going up. Apple went up, but Apple has big open interest at 190. Now, a lot of people get this wrong because they see, oh, a lot of calls. Got to go for that. It's going to go to that. Evenly dispersed. You're looking for where spread traders have to unwind their positions. I traded on the floor a long, long time. So keep in mind that if I was long the 190 puts, long stock and short calls, and this gets near 190, I have to unwind it. That's why you want to find what has evenly dispersed open interest. Doesn't mean they both have to be 43,000, but 39,000 down here and 1,000 doesn't cut it. So what that means in there is this is more likely to go to 190. So when the stock on a 1 minute chart, we played it. We played that bear flag right there. Right there. We played that. We shorted here. We bought it here. We were out. Did I go back to the well? No. But that's an open interest play. So let me give you another one. Well, let me give you a scan. Now, this isn't a scan that's proprietary. This is all it is looking for open interest in all the right places. So I'll show you what we're talking about. So Microsoft, we were talking about it. It happened a little too quick for us, like one tick. But Microsoft had big open interest at 420, 10,000 and 7,000. You're going to see 12,004 isn't the same. Maybe, but not really. So it was 420. So the whole idea is it got sucked to 420. Now you might say, well, did you see a reversal pattern that would have gotten you to play 420? No, that's unreasonable. It was one tick. But how about the other way? Yeah, that I posted after the fact, but I pointed it out. Reversal, consolidation, got sucked to 420. It's pretty cool. So when it gets away from the strike, look for either a bearish consolidation or a bullish consolidation. So that's number one. Number two in here is, how do you scan for those? How do you know if they're important? Well, number one, it doesn't work with half-seas. So if Citigroup has every 50 cents, it just doesn't work as well. Now that they're every $1, it's still not great. You want it 2.5 or 5 or even wider. That's number one. Number two, like NVIDIA today, does it have open interest anywhere? Yeah, well, look at that. 920. You got 950 as 19,000 and 3,600. Not evenly dispersed. Look at the 920s, 14 and 7. That's pretty hefty. So this more would be pulled to 900. 920. So just keep that in mind. That's a big deal to me. So to watch that. Now, somebody on our site sold the 970 calls today, made like 80 cents on a 20 lot, on the bet that this was going to get sucked under 950, and he was right. He was nice to post it, which was great. But let me show you on what we look at. So give me 1 second. So what we look at is this. We go to the open interest. Like I said, you got to be reasonable. I don't use half-seas. I don't use even 1-point strikes. So that's number one. Number two, you're looking for big open interest. And number three, it doesn't work with like Chinese stocks. It doesn't work with American depository receipts. It's called ADRs, because most of them trade overseas, and they're sort of predetermined there. As you see, the big open interest was 85. It didn't come close. So in there. So what we do is we take this scan. This is just anybody can do it on any platform. All we're doing in here is you could take every stock on the planet if you want. So you can just take all stocks. Give me 1 second. So this all we do. I was taking all stocks, obviously all optionable stocks, not futures. And all I'm doing in here is a couple of factors. Like I said, this is all free. Go to add filter, options, open interest. And you could go put in 4,000. And then you want days till expiration. So I've done all this for you. Days till expiration. And then the option price, you don't want a $50 option price. This is all I did. You can make that $9.99. Now, it looks like a lot of things. It's probably about 700. But you sort them by stock. See, it's 1,500. You can make this 4,000 if you want. I just want to show you an example. All you do is take an open interest, days till expiration. And then what you're doing in here is you're sorting by opening by stock. And then what you do, it's only $6.97. You add open interest. I'll add open interest and show you. Like I said, this worked with Apple today. It worked with Microsoft. Now, I think it's going to work with VKTX, which is a rumor takeover that has also big open interest. But let's just go take this. So I want to show you this. So there's your open interest. See the open interest? And it looks like a lot. Like you're like, there's no way I'm going to play it. You're looking for things evenly dispersed. So, like I said, not onesies. You got to have it wider. So you got the Apple. There's your Apple. So you put that in a list. You go through here, and you're going to see, how about AI? Well, it doesn't have any puts, just calls. So you take that one out. So you go in, AMD has a lot. And that's how you build a list of the ones with the biggest open interest. So the one I built for today is right here. And the thing with Schwab these days is not everything's perfect on them saving lists, just to let you know. Well, this is one of them. So all you're doing in here is taking all of these, and I'm telling you, there's certain ones that are probably near their open interest. Some are better than others. Coin, that big open interest. Meta, 470 on the bottom left. Microsoft, 420. Netflix, 620. Look at those round numbers. AMAT's 215. We'll see if it gets there. JP Morgan, 205. Apple, 190. Amazon, 190. Boeing, 182.5. Yeah, they're all near their strike prices. Now, you might say, but Tesla's got big strike price at 175. Wouldn't you have gotten hurt? Tesla's too news related. I only played Tesla in the last hour. By then, it settles down. And that's where I am with these. And like I said, when it comes to the broad market, I've done nothing. Now, why have I done nothing? Well, number one, the bonds are on their low, but the Russell rallied. It didn't sell off. So all bets are off on this. You need this to go beyond the point of no return. You need to see this blasted all the way down there. Instead, it's going up. So that's out. I'm not going to play it. So I'm just not playing much in here until we get a good feel. And the other thing, and here's another tell for you. The XLU, the utility, interest rate sensor utility, should be going down when the bonds are on their low. So it should go to where the CPI was. Instead, it's going up. So that's another tell that maybe today is not the day it's going down. So if the interest rate sensitive stocks aren't going down, even though the bonds are on their low, well, then I'm not going to mess around. You know, like I said, I can't buy when the bonds are down, but the markets are acting like they don't want to go down, at least at the moment. So that's where we are. So just keep in mind, StockTwits is where I mainly post things. So I post a ton on StockTwits. Occasionally I put it on Twitter. That's number one. Number two, I don't even trade earnings. Like I've mentioned a lot of times, I traded in the IBM pit 8 years on the CBOE. How many earnings did I bet on? 0. I never bet on earnings. We played it beforehand and after, and that's what we've been doing in the Chart Patterns Mastery, because there's more than enough to do before and afterwards. So I have no idea about NVIDIA's earnings report, other than we'll probably trade NVIDIA prior to it. We'll trade the other ones prior and, companion stocks, and we'll trade it afterwards. So we've had a lot of luck playing these things after earnings. So I have no idea about NVIDIA's earnings report, and I really don't want to play it. Now, I will tell you, though, now let's go to it, because that's a good question about NVIDIA. Like I said, I have no idea about it, but I will show you something interesting. I bet you that while it's been pulling everything up for a long time, I bet you that the QQQ that day prior to earnings reverts to almost unchanged. So the last earnings were February 21st at the end of the day. So this is what we talk about. Traders a lot of times flatten before an earnings report. So let's see what NVIDIA on February 21st and the QQQ did. So I hope you like that kind of idea. So let's go to it. We're going to go to February 21st. This is before earnings. So what do you notice about this? I don't think that's right. That's the first thing I notice about this. So this is before earnings. Let's see what it did. I don't think it was up 43. There, 19. It was down 19. But what do you notice about that? Well, I'll show you something sort of interesting. So number one, there it is. Up here, you had a bear flag. That's a Brecher ledge when you have a consolidation right here after a down move. On the other hand, it did not go back to unchanged. In fact, it was down 40 and tried to rally. But if it reverts and doesn't go back to unchanged, what happens the next day? So as you see, it's down 19. Well, let's see. Did it, because it didn't get back to unchanged, did it go down the next day? Survey says no. So now you know why we don't bet on earnings. Looks like it was up a ton. So I'm not playing them. So I just go on a lot of times what goes on at the end of the day. That's all. So I'm not betting on earnings. See, if I would have bet on earnings, I would have gotten smacked. There you go. There's the day before. So the QQQ did nothing. If it opened up, it went at least unchanged. So that's how I try to play these things, which means I play them with chart patterns, with a nod to things going to unchanged. So that's how I do that. And let me just tell you, great, that's what makes a market. So on the one hand, you might say, well, AMD had great news, so it's going to go crazy. But on the other hand, you have the open interest, guess where? 165. 16,000 and 6,000. Not bad. You also had the bonds on their low. So the probability of this going to 165 has just gone up. So no doubt. Doesn't mean I have to trade it, but I'm just telling you on how I'm talking about. So I see your point, and I'm telling you, if you want to play that theory about it going down, I'm much more apt to mess around with it now than up here, just betting on it going down. I totally see your theory. At the minimum, with the bonds down, you're betting that that's going to the strike. On the other hand, I had great news, but I'm not playing it to the upside because of all that stuff. But I'm not sure I want to play to the downside because it's so slow. So now trade forever. I got a question for you. You see what Microsoft did? That Microsoft refused to go up, got pulled to the strike on the bottom right. Then it got nailed and went to the strike. Are you gonna buy AMD if it gets to 164.5? Betting on it going back up. And it's a tough call. But I totally see your rationale, no doubt about it. And I totally see that the bonds are diverging in a bad way. I'm just not sure if you want to play it when it's this slow. And that's where I am right now, which means I'm not doing a lot for clients other than trying to find things. I can't short Apple because it could go to 190. I can't mess with Netflix because it might stick at 620. Broadcom, I just have up there as a tell. Let's take some more obscure ones. So if the markets go up, they might go down anyway. And I like if with the bonds down, I'm not looking to buy anything at the moment. So let's look. I like your idea about AMD. Definitely like the idea about that going to 165. I think that's a valid idea. All right, let's take some other ones that have open interest. Open interest. That's not anything to write home about. On the other hand, it doesn't trade that much volume. So I think you see evenly dispersed, 15 and 20. That doesn't help you a darn bit. All right, how about AMD? We already saw that. How about Meta? How about 470s? 7,000 and 5,000, not bad. So if this sells off, let's say bonds are down 30. That's going to go down and that'll get sucked to 470. That's the prediction. So that's at least where I'm looking. So no, like I said, no idea in Tesla. Too news related for me. So on the other hand, we were talking about Robinhood as a buy idea because of the speculation. And we were talking about Tesla as a buy because of short interest. But I'm not touching Tesla. Too news related. From a chart point of view, if this was a $5 stock, I'd be all over buying it here because of that bull flag on a daily. So it's worked off its oversold down here by forming a bull flag. So, I mean, worked off the overbought. So it got overbought, and instead of doing that, it formed a bullish structure above a lot of moving averages. Like I said, if this is a $5 stock, I'd be all over buying it. Wait, it's Tesla, though, and Tesla's so news related. No way I'm shorting it. Let's put it that way. So definitely I see that bull flag in Tesla. So, and you're going to see Tesla bull flags. Usually, like even that's a teeny bull flag, and that's not as good a structure as this. This is over a lot of moving averages. So it's acting pretty darn well. Just keep in mind, once this starts going, just because you missed the first 3 points doesn't mean you can't get the next 20. I don't want anything overnight, but that looks pretty good on a daily chart. And you know what? I'll show you a couple of other things because I'm having, I hope you're enjoying looking at all these different little tricks. So now, like I said, in Amir and Tesla, it would have been real easy to say, yeah, I'll buy it at 172. You didn't, it had good news. But don't write this off next week with that kind of pattern about it having another leg up. Yeah, there. The big problem with Tesla is going to be that red candle. There are a lot of people stuck around 180. But if you have to buy something, you want to buy something that has, I wish it was a tighter pattern, but it still looks bull flaggish. I'm looking to try to show you examples or other things. Well, I'll give you one of them. It's a little tricky, Remember I was talking about the utilities and the bond market was selling off? Finally, some sanity has come back into the utilities. So I know these lately have been an AI play. If you're wondering how, there's a good Wall Street Journal article about it, about like in Georgia Power is having to revise their forecast 16-fold higher because there are a bunch of companies coming here and in the AI kind of arena. Yeah, it's becoming a tech hub. Thank goodness for us if you own houses, but they need a lot of power. So this has been sort of an AI play. So even though rates have gone up, these went up. But now if you get back in the NVIDIAs, they'll probably sell these. So that's something we're watching by the end of the day. And besides that, longer term, because I know I like showing market outlook. Market outlook longer term. Like I said, 5 things. So first things first for me is the bond market. Because the thing about the bonds is there's always an alternative to stocks. On the other hand, the stock markets had started going up when this was still going down. So the second this had a bull flag, yeah, the overall markets took off. But I'll show you something that's a gigantic wild card, big wild card. So we were talking about this in the chart patterns mastery. Check out that bond future chart. I'm going to show you with Thinkorswim. And Penn, if you're in here, you were the one to bring it up. I watch a lot the Dow Jones Commodity Index, which includes the corn and oil and all that, and I watch it against the bond market. So the bond market the last 2 days, 2 days ago closed on its high. This closed on its low. See that little red candle right there? Now it's breaking up. 3-day chart all the way up here. That to me means the probability of the 30-year bond that hates inflation, the probability of this going up goes down dramatically. That's why we were bearish on it. So if the bond market takes back everything from the CPI and the equity markets had rallied because the bond market rallied, well, all of a sudden that theory's out the window. So if this stays up, right now, it's where it was back here in middle of 2022. This stays up. I wouldn't be surprised to see this all the way to here. If I see it all the way to here, then I think this is way too extended. Then it's extended. It's extended relative to the bond market. So that's how I'm looking at the broad market. The higher that this goes, the DJCI, the more likely this goes down, which makes this more likely to go back to where it was pre-CPI. And that's how I'm looking at the broad market. That's why I have a tough time buying anything, even if Tesla looks good on a chart. And trade forever. Nice call in AMD. Remember, you're not only going on the bond market on the upper left, but you're also going on the strike price. So nice call on your part. Yeah, there you go. Now, this is another one, though. It's not as tight a pattern. You're going more on the bond market, pulling down the NASDAQ, which would make this more likely to go to the strike price. So I like that 3 reasons. Yeah, D is acting the same like an AI play. Yeah, all of these suckers. Look at Next Era. Yeah, finally going down. But boy, look at that move. You hardly ever see that in a utility. Just keep in mind, if you, when I'm not on, if you ever see this and you see that collapse and you see it on CNBC and they say markets in turmoil, that's usually the bottom. And it was. They didn't call it here. They put it on TV as a headline here. Now it's right near a lot of schmutz. This is where you look for bearish reversal patterns. So all of these, they're so much extended already. So I have a tough time playing them. This hasn't gone up as much. They've been going for the XLU things more. So let me show you. Well, I'll show you. It's Duke, Next Era. These are 3-day charts. Southern Company. Those are absolutely massive moves. Now, the thing is, you might say, yeah, we got to short those. They're begging to be shorted. They're extended. You just don't have that topping pattern yet. So you got to see that kind of topping pattern. So Dominion, I wouldn't put it in the same group. Now, I'll show you what I want to do the end of the day. I want to play markets to the downside. The negative with the markets is, number one, like I said, there are things like banks holding up. The other thing is, if you go way back, everything's trying to hold that thing it blasted through with the CPI. But that still could get it to here. That still could get it to here. But when it's this low, now you have the if-then. If bonds are only down 9, is this going to stay down? If this blows through the CPI low all the way to here, yeah, I think that'll be down 50. So, I mean, that's how I'm looking at it, which means at the moment it's sort of like a boxing match that you're trying to find the opening. Now, I'm watching also, when I talk about I'm watching the banks for tells, I'm also watching the advanced declines. As you see, they're telling you nothing. New York advanced declines, net up 110, that's nothing. Advanced decline on the NASDAQ, 22, that's nothing. All this means is indecision. That's how it looks to me. If these bonds have another leg down and they go all the way to here, like down 30, yeah, I think you'll see this go down to here. Another 100 points. Oh, that's what I'm looking at. Now, longer term, I still think if the Dow Jones Commodity Index continues up, I think you'll see the bond market finally just give up its ghost on the upside, which will make this realize how extended it is relative to where it was a month ago. So that's how I look at it. Keep in mind, after this massive a rally, you don't have to pick a top. You can look for consolidations, even on a short-term chart. That's what everybody's watching. Look at that. Well, I am. If that breaks, to me, that's a rectangle. It's not breaking yet. But if it does, you're talking about at the minimum. let me go and show you this before I get off here. So I'll give you two expectations. This is still an if. One of them is that 134 points. Second one is that 60 points. So the first objective, if that breaks, is the width of this rectangle. The second objective is the prior move. So 134, where would that get you? I bet it gets you all the way to here. All the way to there. So that's what I'm watching. So take care. Thanks for being with me. I'll talk to you. Have a great weekend. I'll talk to you next week.